Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Okay, let's try to unpack this. Usually when we do this, we try to use measured language. We talk about, dips, healthy pullbacks, maybe a slump if we're feeling a bit dramatic.
Right.
But looking at the sources today, that kind of language, it just feels, inadequate.
It feels dishonest, frankly. What we're seeing in the data, it's not a dip.
Yeah.
And the source material isn't even using the usual term, bloodbath. They've completely upgraded their terminology. They're calling this a crypto inferno.
The crypto inferno. It sounds like a bad movie title, but honestly, looking at all the red on my screen, it fits.
Really does.
It is Friday, February 6th, 2026. And look, if you are checking your portfolio today, I am sincerely sorry, because the Fear and Greed Index isn't just flashing red. It has hit a record low of 5.
5. On a scale of 1 to 100, we call that extreme fear, but a 5 is basically, it's catatonic. The market has just stopped breathing.
It's historic, but the whole mission here isn't to just, stare at the car crash. We need to get into the mechanics of it.
Yes.
We have to figure out why the floor is completely falling out, because it's not just number go down. The sources are pointing to real structural breaks.
From minor bankruptcy to a complete collapse in NFTs, yeah.
Exactly. So we need to dissect the panic, but... and this is so important, we can't just stay in the doom spiral.
No, because while the West is panic selling, there's this really fascinating counter-narrative building in the UAE.
Right, the building through the fire story. And we'll get to all that construction in Dubai, which is surprisingly optimistic. But first, we have to survey the damage. And that means we start with the big one.
Bitcoin. The battered king.
Extremely battered. As of right now, the price is hovering around $62,061. Now, if you're new to this, you might hear $62,000 and think, well, that's still a lot of money.
But context is everything here.
Everything.
That price represents a 13.36% drop in just 24 hours? And if you zoom out just 1 week, we're down almost 25%.
A quarter of its value. Gone in 7 days.
And the really painful part is just thinking about where we were. October 2025. That wasn't even 6 months ago.
We hit an all-time high of around $126,000.
Right. So we are looking at a 50% haircut from the peak in less than half a year. That's just a massive destruction of wealth.
And Bitcoin is actually holding up better than some of the others.
It is. Ethereum is down to about $1,885. That's over 12% in a day. But the metric that really jumped out at me in the report wasn't the price. It was a volume.
Oh, I saw that too. Trading volume surged to over $336 billion in 24 hours, an 11.7% increase.
And usually, high volume can be a good sign, right? It means interest, conviction.
In a bull market, yeah. If prices are going up and volume is high, that's a good thing.
But when prices are crashing and volume spikes like this, that is panic. That's capitulation. It means everybody is sprinting for the same tiny exit door.
And getting crushed in the doorway.
Pretty much. And we can see the casualties in the liquidation data.
Oh, yeah.
In a single 24-hour period, over $1.1 billion in Bitcoin long orders. Long positions were liquidated, wiped out.
People betting the price would go up.
Gone. And globally, across all assets, we're talking $2.59 billion evaporated.
That's $2.5 billion of real leverage, real liquidity, just gone. And speaking of liquidity, there's another metric that feels like a tombstone for this whole cycle.
The total value locked, TVL.
Yeah, the TVL and DeFi.
This is the real canary in the coal mine for the health of the ecosystem.
Yeah.
TVL is the liquidity in the engine. It's the capital that's actually being used.
And for the first time in almost 2 years, that number is below $100 billion. It's sitting at about $92.98 billion.
And just to remind you of the roller coaster this has been, back in 2020, TVL was at $240 billion.
Right.
We all watched it crash with Terra Luna and FTX. Then it clawed its way back up to $150 billion with the whole BlackRock ETF narrative. And now
we're right back down in the mud.
It's a negative feedback loop. Less value locked means less liquidity. That means higher slippage, lower fees for protocols, the incentive to build drops.
Okay, so the engine is leaking oil everywhere. But I want to get to the why. Why is this happening right now? The sources are pointing to something that honestly sounds genuinely terrifying for the industry.
The mining crisis.
Yes.
This is the headline that not enough people are talking about. It's simple, brutal economics. We're witnessing what they call miner capitulation.
Okay, walk us through the math.
Yeah.
Because these companies, MRA, Riot, they're huge. They're publicly traded. They have war chests. Why are they in so much trouble?
It's the cost of production. Post-halving, you factor in current energy rates, the mining difficulty. The source material estimates the all-in cost to mine one single Bitcoin is approximately $95,000.
Wait, let me just process that. It costs them $95,000 to produce a token. But the market price is $62,000.
Exactly. Every time they mine a new block, they are lighting roughly $33,000 on fire.
That's not a business model. That's a fast track to bankruptcy.
It is. And the stock market knows it. That's why MRA and Riot are down around 20%. But the risk for the rest of the market isn't just that these companies go bust.
It's what they're holding.
It's their treasuries. Correct. These miners are sitting on huge stacks of Bitcoin. If they can't pay their electricity bills because every block is a loss, what choice do they have?
They have to sell.
They have to sell those treasuries.
Yeah.
They have to dump that Bitcoin into a market that is already in a free fall.
So the very people securing the network are now being forced to crash the price just to keep the lights on.
It's a vicious cycle.
Yeah.
And they aren't the only ones selling. We have to talk about the ETFs.
Ah, yes. Remember the infinite bid, the savior.
Oh, I remember. Institutional investors have diamond hands. They don't panic like retail. That was the whole pitch.
Well, that narrative has been completely debunked this week.
Shattered. The spot Bitcoin ETFs have flipped from being a massive source of demand to a massive source of supply. Since November 2025, these ETFs have shed about $6.18 billion in net capital.
That is just a staggering amount of money walking out the door.
And it's accelerating. In just the last 24 hours, we saw $631 million in outflows. The data says 62% of investors in these ETFs are now sitting on unrealized losses.
So these are not the hardened crypto veterans who held through the 2022 winter.
No. These are what the sources call tourist investors. They bought the hype, they bought the ticker symbol, and now that their account is red, they're hitting the sell button.
And that adds even more sell pressure.
A lot more. The source has a stat that just blew my mind. The ETF outflows are effectively returning 28,000 Bitcoin to the market every single month.
28,000.
Now compare that to the new supply. The network only produces about 13,500 Bitcoin a month. So the ETFs are dumping more than double the amount of Bitcoin onto the market than is even being created.
It's a supply shock, but in the complete wrong direction.
Exactly.
Okay, so we have miners underwater, tourists fleeing. But if you think that's bad, we have to look at the one sector that has gone from inferno to just, well, to ashes.
The NFT market.
Yeah.
If the crypto market is a correction, the NFT market is a deletion event. The entire market cap has collapsed 72% from its peak in January. But the specific examples are what really drive it home.
The blue chips, or I guess the former blue chips.
CryptoPunks.
Yeah.
The so-called gold standard, they're down nearly 99% in US dollar terms.
99%, that's not a correction. That implies they are basically worthless compared to where they were.
It does. Bored Ape Yacht Club, floor prices have crashed 90%. Weekly sales volume for the entire NFT space is struggling to stay above $70 million.
It suggests the whole speculative era of digital collectibles isn't just pausing, it's facing an existential crisis.
The market is voting with its wallet, and the vote is a hard no.
It really feels like all the air has gone out of that room. But it's not just the JPEGs. The altcoin market, and specifically privacy coins, they seem to be under attack from a totally different angle.
This isn't market sentiment, this is regulation.
Right.
Monero, Zcash, they're down between 20 and 35%. And this is regulatory strangulation. You've got the EU's DAC8 directive coming into play.
Okay, real quick, for anyone who doesn't speak bureaucrat, what is DAC?
It's a very strict tax transparency rule in Europe. It forces crypto service providers to report all transactions to tax authorities. It basically makes it impossible for any compliant exchange to list privacy coins.
Because they can't track the users.
Exactly. So you have the EU tightening the screws. You've got outright bans in places like Dubai and India. The walls are just closing in.
And the price reflects that. We're even seeing high flyers like Solana get dragged down, nearly 16% this week, triggering huge liquidations. It's just a broad market flush.
It is.
Okay, so that's the inferno. Red absolutely everywhere, but these businesses don't just stop because the price is down.
In fact, some of the most interesting moves happen in a bear market.
Right. And I was really surprised to read about Gemini's latest move.
This is a fascinating strategic pivot. Gemini is executing a major retreat from the West. They're closing all accounts in the UK, the EU, and Australia.
So if you're a user there,
You're in withdrawal-only mode starting March 5th. Full exit by April 6th.
that seems drastic. They're just abandoning huge wealthy markets. Why?
Well, the source suggests the regulatory compliance costs probably weren't worth the revenue. But they aren't just shrinking, they're pivoting. They're shifting all those resources to develop their prediction market platform.
Prediction markets, like Polymarket.
Exactly like Polymarket. And they're not alone. Circle, the company behind USDC, is now partnering directly with Polymarket.
What's the deal there? They're moving to native USDC. Is that just jargon?
No, it's really important infrastructure. Before, using these markets meant bridging funds, which is slow, it's risky. Native integration means instant, transparent settlement. It aligns prediction markets so much closer to traditional financial standards.
So it turns it from a sort of gambling niche into a real financial instrument?
Precisely. So while retail is panic selling Gitcoin, the actual infrastructure for betting on future events is getting a massive upgrade. And then you have Tether,
The giant in the room.
the giant. While everyone is selling crypto, they're buying USDT to park their cash. Tether's volume hit $242 billion in 24 hours. But look what they're doing with that power.
The investment in Anchorage Digital.
A $100 million strategic investment. Anchorage is a federally chartered crypto bank. They do custody. So Tether is using this crypto winter to buy its way deeper into the regulated, compliant banking system.
It just shows that the really big players, the ones with the real capital, they believe there's a future here.
They're just building it while everyone else is panicking.
And speaking of building while others panic, I
Yeah.
want to take a trip. Because if you look at the US or Europe right now, it is all doom and gloom. But if you look at the UAE, the vibe is totally different.
It's night and day. The UAE is basically saying, we will build the future while you all figure out your regulations.
Let's start with Marquard Bullman.
A Swiss private bank. Founded in 1932, they manage 12 billion Swiss francs. This is old, serious money.
And what are they doing? In Abu Dhabi, of all places.
They've just received a license from the ADGM, that's the Abu Dhabi Global Market, to open a new branch under the brand ArcChip. And they're going to offer crypto custody and brokerage services.
Think about that contrast. We just talked about American miners going bankrupt and ETFs fleeing. And here you have a nearly century-old Swiss bank saying, yes, right now is the perfect time to open a crypto branch in Abu Dhabi.
It speaks to the time horizon. Retail thinks in days. Institutions think in decades. And they see the UAE providing the regulatory clarity that the West is lacking. They are setting up the pipes for digital wealth management, regardless of today's price.
And it isn't just finance. The source also mentions something from DUA, the Dubai Electricity and Water Authority, that sounds like it's straight out of a sci-fi novel.
The AI virtual engineer.
It sounds like a buzzword. What does it actually do?
It's launching this June. It's an AI system designed to monitor the entire power network 24/7. It predicts failures before they happen, it optimizes power generation, and it fixes issues without any human intervention.
So, a self-healing power grid run by an AI.
That's exactly what it is. And this connects to the bigger theme, right?
Yeah.
The sources project the AI market will hit $4.8 trillion by 2033. This is the utility phase we always talk about.
The speculation phase was buying a picture of a monkey and hoping it went up.
Right.
The utility phase is an AI managing a power grid and a blockchain settling a bank transfer.
And one is dying while the other is being born. That's the friction we're all feeling right now.
Yeah.
The speculative toys are breaking, but the industrial tools are being sharpened.
I love that framing. But before we wrap, we have to touch on the macro picture. We don't live in a bubble, and there is a huge date on the calendar next week.
February 11th.
The CPI data release. From the Bureau of Labor Statistics. Why does this one print matter so much right now?
Because the market is so fragile. When the fear and greed index is at 5, the market has no immune system. Any piece of bad news gets amplified.
Okay.
So if that CPI data comes in hot, meaning inflation is rising, it signals that interest rates might stay high. And that just drains liquidity from risk assets like crypto.
Now, the source material had a really interesting note about the political context here. It mentioned the current U.S. administration and the whole narrative around tariffs.
Yes, it highlights a bit of a discrepancy. There's a lot of noise in the media claiming tariffs are driving up inflation. But the source points out that if you actually look at the raw data, inflation has been trending down.
So the takeaway for you, if you're listening, is don't just read the headlines. Go look at the actual data table yourself.
Always. The disconnect between a political narrative and the economic reality is often where you find market inefficiencies. If the market is pricing in inflation panic, but the data shows cooling, well, that's where opportunity lies.
There was also a brief mention of geopolitics, specifically potential peace deals in the Russia-Ukraine conflict.
Right. Global uncertainty is just poison for risk assets. If some of that geopolitical tension eases up, it lowers the risk premium on everything. It could be the catalyst that eventually helps the market stabilize. But that's a big if. You can't trade on hope.
No. So let's try to synthesize all of this. We have a crypto inferno. Prices are slashed in half. Miners are literally burning cash to keep the lights on. The tourists who bought the ETFs are fleeing with heavy losses.
But at the exact same time, you have Tether and Circle digging themselves deeper into the banking system. You have old-school Swiss money moving into Abu Dhabi to set up shop for the long term.
It feels like a massive transfer of ownership is happening. A changing of the guard from the gamblers to the builders.
That is exactly what it is. This is a final flush. It's painful. It's ugly. But it separates the signal from the noise. The speculation is dying. Goodbye expensive JPEGs. But the actual infrastructure is maturing.
And that leaves us with a really provocative thought to end on, I think. If you look at the price charts, you see an inferno. But if you look at the blueprints in Dubai or the server rooms at Circle, are we witnessing the death of crypto or just the death of the easy money era?
I think the era of getting rich quick is over. The era of the technology actually starting to work. That's just beginning.
And that might be a painful transition, but a necessary one. So, check the BLS data yourself next week. Don't just trust the headlines. And maybe, just maybe, go for a walk instead of checking the charts this weekend.
Definitely go for a walk.
Thanks for diving in with us. We'll catch you in the next one.